Anthony here. Welcome back to Metals and Momentum, and I wanted to give this special report on the S&P 500 right now, because right now we are experiencing a significant warning signal in markets right now. So I have the S&P 500 chart pulled up, and I want to go over these key levels of support and what I'm actually seeing in the markets right now. One of the things that I've been watching for quite some time is gold, silver, S&P 500, and these are all recommendations of things I should watch based off of my Substack subscribers, plus the things that I actually own on my own. So for example, I've been a long-term holder of silver for quite some time. It's been about 11 years now, and I have just sold off all of my physical silver and move that over to gold because I'm seeing red flags in the market all over the place, and I'm going to go over some of those red flags in this video. I'm seeing the S&P 500 decline, and if you actually look on the chart here, we can start to see we are recording on Tuesday at 10 a.m. We are seeing that there is a big break of the S&P 500 out of this bear flag that's formed right here, and one of the things that I find that super interesting is the relative strength index. It has started to make lower lows. I'm going to explain what this actually means. So the relative strength index is how much buying is actually happening in the market right now. Like for example, if if retail is in and they're buying, and if the smart money, the big money is buying, then that relative strength index is going to be quite high. So for example, if we go back to July of 2025, we could see that the relative strength index was at a pretty significant high. It was at 76.34, and that would correlate with this portion of the market here. We got a little bit overbought. The RSI was signaling there, and what do we see? We got a little bit of a decline. Now the relative strength index goes down to 47, which is a little bit more reasonable, and now we have space to make this move a little bit higher, right? So we experience the next bull run up in the S&P 500. It's trading in that wedge pattern that we were following all throughout 2025. And if we look at that next peak in the RSI, we can see that we've gone down to 73.62. back from 75, but the S&P 500 has actually carried on and gone higher. You would expect that if the asset is moving higher, then the relative strength index would also move higher. And if the relative strength index is actually going downward, that means potentially smart money or institutional buying has left, and retail buying has continued on and bid the market up. So we experience a dip in the RSI all the way through here, and we've continued this dip lower and lower and lower. But the S&P 500 has made new highs, and then we stopped making those new highs back in October, and the selling pressure has started to kick up. So when we reach this peak back in October, and I'm just going to delete this line that I just drawn so we can see the RSI really clearly. In October 2025, we would think that the relative strength index and the buying in the market would actually be closer to all-time highs, but it's not. In fact, the RSI at this peak in October was at 68. That is I guess that'd be like a 10-point move downward on the relative strength index. And I was watching the market through December and like late in the year, and I was noticing that just the volume is very, very low. That to me signals that retail is buying heavily into the indexes, but the smart money is not. So when we reach this peak, we've seen a decline in that RSI from the peak here to the peak here, but then we started to actually get a decline. Then we started to form this bear flag on the S&P 500. When we return back to here, where is the RSI compared to back here, we can see that, like I said, the previous peak was at about, we'll call this 68. When we reach this peak once again, where is that RSI? 60.9. When we actually break into all-time highs on the S&P 500, we're talking about this channel right here. Where is the RSI? 61.82. And now that we've actually broken through this bear flag that we traded in here, this is the break right here. That RSI is sinking like a ship. That means the relative strength is declining and the purchasing into the S&P 500 is declining. And that is signaling not only smart money, but also I bet retail is now thinking about moving outside of the S&P 500. So I'm just going to delete these drawings that we've drawn on the S&P 500 so we can get a clearer look at where the support lines actually land. So what we've experienced as of Tuesday at 10 a.m., just after 10 a.m., we are breaking through not only the first support, but we're also breaking through this bear flag that has formed on the S&P 500 as well. So what could end up happening here is we could end up testing that second support, making a run back up at the first support, but I've turned this line here red because it signals that this is acting more like a ceiling now. So for example, if we make a run back up and try and test that first support, if we don't actually break through, that remains a ceiling, and what could end up happening is we could start to break down and run towards this third area support. From there, we'll be very oversold on the S&P 500, and we could probably retest the second support. We could maybe even retest the first support as well, but ultimately what this is signaling is that we've broken out of a bear flag. We are probably going lower on the S&P 500, and the relative strength of the buying on the S&P 500 is also declining. So that means we are more likely to not necessarily experience some of these bounces that I've potentially drawn out and estimated as to what would actually happen. What we might get is something like this. And that would be very bearish on the S&P 500, of course. If we take a measurement from this, where we are right now, to the third support, we can see that's a decline of 4.7%. If we break that third support, which might be a little bit tough because by the time we actually get here, the 200-day moving average is going to rise and be sitting right under this third support. So I would expect a pretty serious bounce on this third support, and I wouldn't be surprised to either test the second support or maybe even make a run back up at that first support, and we'll see what happens once we get somewhere around here. So it's hard to guess right now, but the break of the bear flag and then all of these indicators that we just went over, the RSI, the fact that gold and silver right now are just absolutely screaming. Silver tends to run at the end of a bull market when broad markets tend to peak. And there's a period in time where the S&P 500 could start its decline, like for example, right here, like the projection that I've drawn out, and silver and gold could continue much higher. Now, if the S&P 500 starts to decline at a very rapid rate, then all assets are probably going to get sucked into the decline, and eventually at some point in time, if the S&P 500 is really cracking down, then all of these assets are going to start their decline as well. But you always can signal a top in the broad markets when gold and silver tend to just absolutely skyrocket. And if we look at the charts of gold and silver, they are just going absolutely nuts right now. And the same thing can be applied when you look at in terms of the RSI. The same things are actually happening in gold and silver. So for example, we're looking at the gold chart here. When gold was $4,362 per ounce in American dollars, we can see that we created this peak right here. The relative strength index was at extreme, probably overbought, and that's why we needed to get this pullback that we actually experienced. we can see that the RSI goes to 86. And then when we get that pullback, we go to oversold conditions at 46 on the RSI. But you'd expect that this point right here would be met with some serious buying pressure, probably higher than where we were at the previous peak, but that's not the case. Same thing is happening in gold as the S&P 500. The relative strength of buying is declining while the asset is going up. And this is a big red flag. We get this peak on the RSI, followed by this peak in gold. And then we can see that what is happening here. We're getting a decline in that RSI. And what could essentially happen is that this movement upward in gold and in silver, the same thing is happening in silver. This peak, look at this. This is even more dramatic. I'm just looking at this chart for the first time myself here. When we see this peak right here, the RSI, extreme overbought. We're at 85 on the RSI. Now, silver's a crazy market, so this could continue on higher for a little bit of time here. But we're experiencing the same thing. Back even at this key support level, we're seeing maximum strength. At this key support level, the asset has risen so dramatically, but we're still almost at the same RSI, just ever so slightly higher. And then when we're now pushing near $100, and we can see that the relative strength of buying right now is kind of low, which is a red flag for all the assets that we've essentially talked about here. So one of the things that I'm doing right now is I've sold off some of my silver, moved into gold, because if we get into a decline in the S&P 500 and all assets start to tank, then what we could see is that silver could actually tank quite a bit, opposed to something that is a little bit more of a larger pool of money, which is gold, right? So I've moved my physical silver over to gold. If we get that decline, we're going to experience less of a decline in physical gold, opposed to physical silver, which is a much smaller market. I've actually measured the downside on physical silver, and you can see it laid out right here on my chart. The upside on physical silver, I think we could go to 119. That is a 28% gain, maybe a little less than that now, as of Tuesday at 10:15 a.m. 26% gain is the upside projection, but the downside on physical silver here is about 42%. And that could take us back to $54. That would shake out a lot of the new investors that we've seen during this massive run-up in physical silver. And I think that could definitely happen. Now, going over to my own portfolio, what I've said to Substack subscribers is that I'm raising significant cash levels. Now, I write on Substack about what I'm doing with my own money. And if you're interested in joining me on Substack, I'm Metals and Momentum. The links are down in the description below. It's $9 Canadian per month, which means that's probably somewhere around like $4 US per month. And what you get is a bi-weekly report from me, and you're essentially seeing this analysis in real time as I get these reports. And the YouTube channel is kind of secondary to my Substack subscribers who actually pay me to make some of these updates. So one of the things that I've said to Substack subscribers over the last little while is I'm raising cash levels, and I've just done a full inventory of my entire portfolio. So you're hearing it here first on YouTube. But I've been saying for quite a while, we want to raise cash levels. And right now I am at 51% cash. Now that doesn't include another asset that I hold, which is a 0 to 3 month treasury bond fund that mimics the price of that 0 to 3 month treasury bond. And it does pay me a little bit of interest to hold that as well. It's a specific stock that you could essentially buy on the in the market that would mimic a 0 to 3 month treasury bond. It's paying 4.1% right now. And I expect that to go a little bit lower, but It's something that wouldn't experience the decline as the S&P 500 starts to decline as well. That specific holding in my portfolio is 10% right now. So technically, I am about 61% cash right now. And I have really only two long-term hold positions that I've had, and they're 6% and 3% of my current portfolio. Very small percentages. If the S&P 500 declines, those are not going to decline all that much. And if they do, I'm not going to really lose sleep over it. But majority of my portfolio right now is either in physical gold, and then cash. And it's because of some of the indicators that we've actually gone over right in the chart. This breakdown in the S&P 500, this is going to start to get nasty if this really plays out, and especially if the relative strength of buying is going down. I think this is a huge red flag in the markets. You got to be a little bit more cautious, I think, and that's what I'm doing with my own portfolio. And if you want to get an inside look as to what exactly I am doing with my own portfolio and when I'm making moves and when I'm selling and when I'm buying, then you can hit Substack and join me there. Metals and Momentum. The links are in the description, and that is where I'm going to leave it. I just wanted to give that key update on the S&P 500. I know there's a lot of people who invest in the S&P 500, and as this tops out, if we get to certain points on the charts, you're going to see that selling come in, opposed to what's happened in the past, especially over the past year. Retail has been buying up the S&P 500 like crazy, but when it starts to roll over, you're going to see the reverse happen. And I just wanted to put that warning out there to some of my Substack subscribers who are deeply invested in the S&P 500. We could be seeing the top play out on the S&P 500 right now in real time. So I wanted to give that update and get this out to you. Thanks so much for listening. If you're interested in this type of technical analysis, chart breakdown kind of thing, subscribe here on YouTube. Consider joining Substack. That's $9 Canadian per month, which is quite affordable for a lot of people. And I really made Metals and Momentum to tell my family and friends about what I'm doing with my money, so that way they could actually follow along. And it just so happens that Substack is a great platform for others who are interested to get my analysis as well. So that is where I'm going to leave it. Thanks so much for watching. My name's Anthony, and we'll see you in the next one.